Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 28th of September, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news overnight that's driven the trade. Asian markets had low volume due to the fall festival holidays in Hong Kong, Korea, and Taiwan. Markets said to have sold off on Friday, led by biotechs and healthcare as investors anticipated comments regarding pharma regulation by Hillary Clinton on Meet the Press on Sunday. So the market, and I did see that, and I think I might have posted an image of the healthcare ETF just taking a dive on Friday ahead of or with the move that occurred. I was not anticipating that move actually. IMF's Lagarde came in and said 3.3% global GDP target's no longer realistic, nor is 3.8% for 2016. They're cutting their expectations for global GDP. Just a half hour ago, we got personal income in the U.S. for August, 0.3% versus 0.4%. Personal income's lower. Personal spending is higher, 0.4% versus 0.3% estimated. The August PC deflator came in line at 0%, year on year at 0.3%. And then Fed's Dudley started speaking at 7:30 as well, saying a lot there. One of the things he's saying is that the Fed will raise rates later this year. The Fed's Dudley is a voter and a dove. There would be value in pushing unemployment rate below the natural level. He says if we continue on the current trajectory, there will be a strong case for liftoff, meaning on rates. We'll go slowly when liftoff occurs. Frankly, it's the same thing I've said all year, since the beginning of the year, probably late last year. They have very little room to lift off, and I wish they'd just get it over with and just give us the interest rate increase, and then just relax, so the market can auction based on earnings and based on valuations rather than based on what the Fed is doing. Let's let's look at the economic calendar here. Looking ahead for today, 9 o'clock, we have pending home sales expecting 0.4% month on month, year on year 7.8%, and then we have Dallas Fed at 9:30, negative 9.5. That's a low importance figure. And then as far as speakers, not seeing anyone else. Fed Speaker Evans coming out at 12:30 with monetary policy comments. That's going to be important. And then at 4 o'clock Central, 5 Eastern, Fed Speaker Williams on the economic outlook as well at UCLA. Let's look at what we did on Friday and how that's affecting us. So Friday's expectation coming in, we saw that we were gonna open in a gap. The expectation is for responsive selling back into the 27, 29 area. And then we expected 40.50 to be taken out, but 40.50 was taken out right at the beginning, right here. 40.50 was the high before we rotated up and went to 42.50. The expectation was really the primary hypothesis was really for it to drop and then to find its way up and through to higher prices toward the 1960 area. What it did though is it closed the point of control at 40.50 early, tested lower, and it just showed weakness all along until it pushed to 42.50, and then sellers stepped in. The afternoon was spent selling. We got back into the prior day's range, Thursday's range, and once we did, the 1950 became a target, and then beneath there, 1907 becomes the main auction target below. It did not quite get there. Got to 1910 quarter. Overall, very thin profile down below. It looked like This was definitely not the traditional P shape, even though the profile is P-shaped. So if we put this on this side, it would look like a P, which would show a short covering. But this is not short covering. This is why it's important to keep track of the context of what's going on. If the market had opened here, ran up, and then slowed down and traded up here for the rest of the session, then you have shorts being squeezed out with force, OTF presence on the buy side, and that would be a short covering profile. But here, what we did is we balanced up top in an open auction out of range, completely balanced trading. We had a very high kurtosis, or very fat balance area, and then all of that energy dissipated once we broke down through. And again, that was based on the comments, or the anticipation of comments by Hillary Clinton. Supposedly, the media likes to have a reason for why things happen. But on this chart here, I did post this chart. On this chart here, this is a 15-second chart of all indices starting at 0% at the beginning of the day. So at the open at 8:30, everything is normalized, including crude oil, which the pit opens a half hour before 8:30. Everything normalizes to 0%, and it gives me an idea of the relative relationship between all the products. And what we see here, right here, this dashed green is the healthcare ETF, and you can see that it just started to slide, and then the rest of the market just followed suit right there. You can see it's just already below 2.5% from the open when the ES and other products started to migrate lower. The ES being the dark green. It's somewhere in here. There's the ES right here. You can see it's holding steady up to this point, and then it starts to flutter down, and there's the ES right there. And the healthcare was where we saw the movement. With it, of course the Russell moved quicker. A lot of healthcare issues in the Russell, and so we see the move there. So that's, I can see that it's happening because of that sector, driven by that sector, biotechs, pharma. The NQ has a huge proportion of it that is biotech, and they got hit as well. And so overall, not an anticipated move here. I really did expect, there was a pretty good probability of it bouncing, and I'm pushing towards a 52.50 and 60. The 60 would not have been possible today or Friday due to the range, the daily range statistic. It is possible, but it's a very, very low probability. It's in the 0.5% type of probability. But overall, the market just gave back a bunch of the gains that it had over the last few days. Let's zoom out a little bit and look at the 15-minute. So what have we accomplished since Tuesday? So here's Tuesday, right? This is Tuesday here, right there. This is Tuesday's action. Tuesday, we did this. Wednesday, we did this. Thursday, we dropped, and then we came back. And on Friday, we went to the high end of the range, tried higher, and ended up going down. So what do we have here? We have balance. So this whole area here is balanced. So that means we did not accomplish much at all. We're still auctioning in the same region, which means that I have to extend this composite forward to see where the meat of the profile is. MCLVN from the Thursday through Tuesday profile held by a couple of ticks on Friday afternoon, and we are basically trading right now. We are trading in the 1910 area. We're trading right here. We're trading against the extreme of Friday's low, but we're also trading up against the heavy balance zone from Thursday. So am I expecting this to break and just run away to the downside? Nope. I'm expecting it to get tangled up in the open if it stays here for the next 20 minutes. Otherwise, I'm expecting it to move lower and then start moving back higher to this new MCV at 23. I expect it to be attracted to the 23 area and trade up here. I'm expecting mostly a quiet day chop. Unless there's news, I'm not seeing how this market could gather the energy to break out one way or another. To be honest with you, I'd love to be wrong. Love volatility. Love to see a market that is not being held by a chokehold. Love to see it auction. I'd love to see what extremes we can get on the downside. I'd love to see what extremes we can get on the upside before it falls back in. We're moving from balance to balance. So this is another MC. See this profile here? That's another MC, which means there was balance there. This is an MC that we're currently living in, and that's where the 5250, 60 area, that's where it comes from. It comes from this balance zone here. So we're going from balance to balance to balance with very, very short spurts of OTF activity, of trending activity. So overall, the volatility we saw through the end of August has dried up, despite the fact that the VIX, which is not really an incredibly good measure of volatility after all, the VIX has been stuck in the 21 to 24 area. You can see the VIX climb to a very high value here at 54, 53 on that drop in August, and has been consolidating since. It's been quiet though, even though the VIX is higher than where it was a while ago. But we're the VIX was in the 18, 15 area before the August correction. So this morning, the primary hypothesis is for the market to move. It's right on the edge here. I expect the market to get tangled up in this point of control. I expect it to be choppy. I expect short time frame traders to be in control. The sell-off on Friday was taken back, but not quite. We couldn't get to the mid, so there's some buying energy that's likely to come in here. Don't forget that the overnight session has input in the mix here, but overall it pushed to 29.75 and has pushed below to 02, so through that 07 area with a point of control at 10 where we're trading now. So the overnight profile is also telling us balance. It's in the very heavy part of the profile. I don't know if we've had our continuation move here with this low, and this is ready to do a corrective and therefore responsive back up to 21, 23 area, the MC point of control. It's hard to tell. But overall, expect the open to be slow and sluggish, with some incentive because of the gap to. I expect it to get tangled up here, and then I expect it to rotate up towards the 23 area. Okay, once it gets through the 23, I'm looking for it to. I'm looking for it to bounce around, and then it still has the point of control of the prior day to get to at 1935. That's the primary hypothesis. Secondary, chop around, try higher, fail, and start migrating lower. And below us we have the most recent low at 97 and a quarter, and then we start to move into the August 27th, the August 26th, 27th trading template right back here. And so 84.75 gets into play, and then we start to look at the levels. We start to look at these days for templates. But for now, let's wait for it to get to 84 before we look at what's next. Anyway, I'll leave you with that. One quick reminder. This week on Thursday, it'll be the first of the month, the first Thursday of the month, which means there's a public Ask a Question webinar, AAQ or AMA, webinar this Thursday. Look for the link on Twitter. Also, if you're part of the Futures Trader 71 mailing list, I'll send you an invitation through there as well. And it'll be an opportunity to ask questions about a bunch of stuff, but I also have some things I wanted to share about execution. And then on top of that, Friday is non-farm payrolls day. So Thursday, exercise some caution. We're building up to the second major number of the month right on Friday. So keep that in mind as far as what the market's context is for trading, what the investors are looking at as far as risk on, risk off. Good luck today, and I'll catch you tomorrow morning. Take care.